Good morning, it's Harvey Jackson. Just going to get through the prospective planting. US says it may, and I have to emphasize may, pull out of Iran war in 2 to 3 weeks. So the market actually reacted pretty positively to that. And then today it's maybe on both sides of it, but um, yeah, will that actually work as well? And I get into some other news topics here as well, and diesel fuel here. So let's just have a quick look. You can see what the actual planting prospective planting looks like. So spring wheat is lower than the trade estimates. All wheat was a little bit lower. Soybeans coming in at 84.7 million acres expected and 95.3 expected as well. So that is so soybeans slightly lower and corn a little bit higher. So and that has an impact on the market here too. So here's your quarterly grain stocks report. Um, uh, Not a big surprise on anything there at all. Kind of a non-starter. Uh, Karen Brown put this out, and it was kind of interesting. So last year's trade estimate versus this year's trade estimate, and what numbers did they come up with? Almost like they just copy and pasted it from last year. Maybe they didn't get a poll done. Oil waivers on uncertainty over war remains. There's some analysts suggesting that this may not even happen. As far as 2 to 3 weeks here, but the market reacted positively. Um, Iran still has a stance to saying that they're talking, but no real negotiation, and there's still that uncertainty whether that's going to happen, and hitting Iran, or I'm going to say Israel, Iran are hitting, or U.S. are hitting some civilian structures there as well. And this popped up as well. So, world does not need a crisis over Taiwan. Opposition leaders says ahead of China trip. So, Taiwan opposition leaders going to China next week, and Beijing refuses to speak to um, uh, Taiwan president, and China claims the territory, of course, and that's not adding too well here. Um, there's some flooding expected in China with typhoons, and some areas are going to be dry, but that's common. So I just put this on. I had a few conversations in the last week or so about diesel fuel, and I had recommendations to buy diesel fuel when we're at the bottom end of these curves. And this is prior to the war here, of course. But when we get to the war, you can see, boom, yeah, we had that elevate. But even if we stayed in that constant wave analysis, is still best to buy there. But when you look at this, so this is the forward curve, and it always makes sense to buy farther out. So May futures uh, is 415, and you can go all the way out to July, and it's 370 or 347. So you've got that savings just by buying fuel in the futures. And uh, there's a few companies out there, but here's your Nexus fuel, or Fuel Nexus out of Lloydminster. They will allow you to buy fuel in the future, and they use some sort of mechanism. I'm not exactly sure if it's the exact um, mechanism is this, but it does let you pay for the fuel delivered in a few months, and it looks like it's always an advantage rather than paying the rack pricing, because this is closer to the rack pricing right now, right? So if you can buy, you're going to need fuel in a couple months, and you can take it by the semi load. Use companies like Fuel Nexus. Quick look at the weather. There's winter storms going across the U.S. There's still some, uh, still some fire watches and everything as well going on. So there's quite a bit of active weather going across the U.S. right now. Snow accumulation looks like it's going to get to up to 12 inches in just south of the border. Quick look at the markets here. Canola is down $1.20 at 7:30, and your November canola is down $1 at 7:35. Rapeseed is down 3. Soybean oil is down 88. 0.88 of a cent at 68. Palm oil is down 65 ringgits. It's 4,732. Crude oil is just hovering right below the $100 at 99.86. So it's down $1.52 here. And your diesel fuel is up 5 cents when I took this snapshot. Soybeans are down $5.75 at 11.65. Spring wheat is down 8. Hard red winter is down 17. Chicago's down 14, and corn's down 5.25, and your Canadian dollar is up 0.17. It was up yesterday as well with the news of the that there's going to reduce the escalation in the future here. So I've been showing this a few times here, but basically before the war and where we are now. So palm oil is the leader, then soybeans, and then canola and rapeseed as the seed, still up like 6% since beginning before the war started, and soybeans are actually down from that timeline. Quick look at canola, so you can say, you're basically cutting off here somewhere, but it's up slightly and still respecting that upward trend line. Same thing with the November. The European rapeseed, you would say that there's no, not a very good line, but drawing a line here, but it looks like it pulled back from that level that was made a couple weeks ago, and retraced a bit. So the price differential is now $91 differential between European rapeseed and Canadian canola. And whether that will encourage any stuff to go east through the St. Lawrence, I do not know. I know freight costs are going to be quite a bit higher. Soybean oil futures climbing that line. Soybeans respecting some shorter term moving averages and that previous ceiling, basically. Crude palm oil trying to make some new highs for multi years for sure, but did pull back. So West Texas, I don't have the Brent on here, but Brent's even higher. But just beginning of before the war started, and just looking at New York Harbor diesel fuel is the one that's got the biggest gain, even over the crude oil. And then you've got your soybean oil, soybeans and canola down here. Is same graphic as before. Crude oil, here we are. Still looks like it's supported, even though we pulled back there. Brent, um, not as high as it was made last week, but looks like it's going to try to retrace with that news that there's going to be some de-escalation of that war. Diesel fuel still pretty high here. Canadian dollar um, is looks like it's going to maybe take a pause here. Possibly, we'll have to see how that all plays out. I think it's maybe following the S&P or something, because you kind of got landlocked oil in the country, so we're not really trading like the petrodollar that we normally would be. Almost the opposite. U.S. dollar, and here's your S&P. It almost looks like the exact same thing. Gold futures, nice, just a start of a recovery with the U.S. dollar retracing a little bit here. So is the silver. Let's quick look at the wheat. We got to that threshold level that I talked about yesterday, and then retraced. And Kansas did the exact same thing, down pretty good for all three complexes here. And same with the French milling wheat as well. And corn didn't have the last few days all that positive either. Oat futures was on the way up, and is taking a pause here today with all the other cereals. And that's all I have for you today.